Imagine this. I wake up tomorrow in the year 2026, and every dollar I've ever made is gone. No medallion fund, no track record, no empire. Just me, a fresh start, everything you ever built, every dollar you ever earned, every smart move, every breakthrough, every triumph gone. Vanished. No safety net, no empire, no medallion fund legacy to lean on. Just silence and a bank account sitting at absolute zero. And in that moment, before panic even has the chance to set in, a single question starts echoing in your mind. What now? How do I rebuild from nothing? Because it's one thing to build wealth for the first time, but it's something entirely different to rebuild it when the world already expects you to have all the answers. And that's where this entire journey really begins, not with money, not with strategy, but with that raw, uncomfortable moment where you're forced to ask yourself who you are without the success you once had. Most people think losing everything would be the end of the story. But for someone who has spent decades in markets, patterns, numbers, chaos, and probabilities, that loss isn't the end, it's the reset button. A clean slate disguised as a disaster. You can almost feel the pressure shifting from fear to clarity because now you're not protecting a fortune, you're rebuilding one. And that forces a kind of honesty most people spend their whole lives avoiding. What worked because you had resources and what worked because you had principles? And when all the noise fades, what remains? That's the moment you start thinking differently, not emotionally, not desperately, but analytically. If I stood in that 2026 moment with nothing left, the first thing I'd remind myself is this: fortune is a result, not a starting point. It's the byproduct of making thousands of small, intelligent, disciplined decisions. And those decisions come from one place, understanding how the world really works, not how we wish it worked. Money doesn't respond to hope. Markets don't care about your past status. Algorithms don't owe you respect. You either play the probabilities or the probabilities play you. That's the mindset that would immediately kick in as I stare at that empty balance and think, all right, we start again. And here's the part most people never understand. Starting with nothing isn't the disadvantage they think it is. In fact, it's liberating. No noise. No obligations, no bias, just a blank canvas. When you have nothing, you're not defending, you're creating. You're not proving anything to the world, you're proving something to yourself. That wealth was never the magic, the principles were. That success wasn't luck, it was the system behind the decision. And once you've built something extraordinary once, you know the architecture, you know the discipline, you know the patience, you know the traps, and you know that every fortune starts with a single choice executed consistently. So if I'm standing in 2026 with no money, no reputation leverage, nothing but a fresh start, I'm not thinking about shortcuts. I'm not searching for the next miracle stock. I'm not gambling to make back what's gone in one wild swing. I'm looking for the highest probability path back to wealth, because wealth isn't speed. It's certainty multiplied over time. And when you understand that, you stop searching for fireworks and start searching for compounding. You start asking yourself, where can I put my next dollar so it grows quietly, predictably, mathematically? Because emotion wants excitement, but wealth wants consistency. And at that moment, standing in front of a future, you have to rebuild from scratch. That's where clarity becomes a superpower. Suddenly, the noise disappears. Suddenly, you don't care about trends or hype cycles. Suddenly, the only thing that matters is this: what decisions today give me strength, stability, and exponential upside tomorrow? That's the mindset that builds fortunes. That's the mindset most people never reach, because they're always chasing something instead of understanding something. But when everything is stripped away, you see the truth with painful clarity. Fortune is not an accident, it's architecture. And rebuilding it starts the moment you decide to take the first step with absolute precision and zero fear. If I'm standing in 2026 with nothing to my name and a blank financial slate in front of me, the very last thing I'm doing is trying to recreate the complexity of what we built at Renaissance. People love the fantasy that I'd sit down with a laptop, fire up some code, and magically rebuild Medallion overnight. It doesn't work that way. Medallion wasn't a strategy. It was an ecosystem made up of brilliant minds, endless data, decades of refinement, and a mountain of infrastructure that simply can't be replicated by one person starting from zero. And that's the point most people miss. If you strip away the machinery, the team, the systems, the computing power, the history, the edge, you're left with something much simpler and far more honest, basic, intelligent investing. So if I had to rebuild my fortune from scratch, I wouldn't chase complexity. I wouldn't cling to the past. I'd go for the most powerful tool everyday investors have but rarely appreciate: simple, efficient, high-quality ETFs. Most people underestimate simplicity. They think wealth requires genius-level insight or hidden secrets or some complicated strategy only insiders understand. They don't realize simplicity is often the smartest position you can take. Complexity might sound impressive, but simplicity compounds quietly. And if I'm starting with nothing, I want something I can build on immediately. No infrastructure, no research lab, no algorithmic machinery required. Just pure, probabilistic, long-term wealth building. ETFs give you that. They give you instant diversification, instant exposure to powerful sectors, instant risk balancing. They turn the market from a battlefield into a system, and systems beat emotions every single time. Think about the average person trying to grow their money. They jump from stock to stock like they're playing hopscotch. One moment they're chasing tech, then energy, then AI, then some random rumor that goes viral online. They end up exhausted, confused, and usually broke. Why? Because they're trying to play a game they don't understand. They're trying to outsmart professionals with decades of experience and billions in tools. Meanwhile, the ETF investor, quiet, patient, boring, just rides the market like a slow-moving escalator. No panic, no guessing, no stress, just measured, steady progress. And if I had nothing left and needed to rebuild from the ground up, I'd choose measured, steady progress over chaos every single time. ETFs let you do something incredibly powerful: remove yourself from your own worst instincts. They take away the temptation to constantly tweak, adjust, panic sell, overreact, or chase hype. Instead, they force you into a rhythm. A rhythm is where wealth is built, quietly, predictably, compounding in the background while life moves on. And the beauty is, you don't need to be a genius to use them. You just need to be disciplined enough to keep showing up. That's the part most people fail at, not the strategy, the discipline. If I'm rebuilding, I want exposure to broad markets without needing to pick winners. I want exposure to innovation without needing to guess which company leads the next breakthrough. I want stability without needing to micromanage. And the smartest path to getting all of that is through simple ETF allocation. It's not sexy. It's not dramatic. No one brags at parties about their ETF portfolio, but they do brag about the results 15 years later. Wealth doesn't care how glamorous your strategy looks. It only cares how reliably you stick to it. And here's the most important part. Most fortunes collapse not because the strategy was wrong, but because the person running the strategy lost discipline. They deviated, they panicked, they got greedy, they chased something shiny. ETFs protect you from yourself. They remind you that the market rewards patience, not excitement, consistency, not chaos, time, not tactics. So if I had to rebuild in 2026, I wouldn't chase complexity. I'd embrace simplicity, because simplicity executed relentlessly beats brilliance executed inconsistently. That's why I'd start with 3 ETFs. That's why I'd ignore the urge to reinvent the wheel. And that's why rebuilding a fortune from scratch is absolutely possible, if you understand that the quiet path is often the most powerful one. When people think about investing in the U.S. market, they picture all the noise, all the volatility, the headlines, the drama, the predictions, the endless stream of opinions. But when you zoom out far enough, when you stop looking at the market like a roller coaster and start looking at it like a living organism, something becomes incredibly clear. The U.S. market has a built-in upward bias, not because it's magical, not because it's invincible, but because it constantly evolves. It sheds its weakest company, elevates its strongest, and reinvents itself over and over without asking for permission. And if I'm starting from scratch in 2026 with nothing but a strategy to rebuild my fortune, I want to tap into that unstoppable evolutionary engine from day one. That's why the very first ETF I'd buy would be a total U.S. market fund. Not the trendiest name, not the most aggressive pick, just a pure, clean, broad slice of the entire American economy. Think about what that actually means. It means I'm not trying to guess the next Apple. I'm not trying to predict when the next Amazon emerges. I'm not picking through thousands of companies trying to find the golden ticket. Instead, I'm letting a system that has survived wars, recessions, inflation waves, political chaos, technological revolutions, market crashes, and global crisis do what it's always done: adapt and grow. The U.S. market is a machine built on innovation, competition, and the relentless pressure to improve. It doesn't need me to micromanage it. It doesn't need me to guess which CEO will make the best decisions. All it needs is time. Most people don't understand why total market investing is so powerful. They think it's lazy. They think it's too simple. They think real wealth comes from picking winners. But the truth is, picking winners is almost impossible even for professionals. The landscape changes too fast. Technologies disrupt entire industries overnight. Consumer behavior shifts unpredictably. Geopolitics rearranges supply chains without warning. One unexpected breakthrough can render decades of dominance irrelevant in a heartbeat. But here's the thing. The total market ETF doesn't care. If a company fails, it quietly falls out of the index. If a company rises, it naturally grows into a bigger piece of the index. You're not picking winners, you're letting the market do it for you. This is the part most investors never grasp. You don't need to know which companies will dominate the next decade. You just need to own the place where those companies will appear. The broad U.S. market is like fertile soil. Seeds grow, some fail, some flourish, but the soil keeps producing. And when you own the soil, instead of trying to bet on individual seeds, your risk falls dramatically while your long-term potential skyrockets. That's not luck, that's structure. If I'm rebuilding with zero margin for error, I want structure on my side. I want an asset that absorbs mistakes, that adjusts automatically, that requires no prediction, no perfection, no miraculous timing. A total market ETF gives you exposure to thousands of companies from giants, to tiny innovators you've never heard of yet, and hidden inside that mix are future leaders quietly being born. The market will identify them long before you or I ever could and allocates weight accordingly. There's also a psychological advantage that people underestimate. When you own a total market ETF, you stop obsessing over every red candle. Your emotions stop hijacking your decisions. You stop panicking when one sector dips, because you know another is rising. You stop feeling the need to chase trends because you already own the place where every trend eventually flows. Suddenly, the market feels less like a gamble and more like an engine. A slow, steady, powerful engine that pulls you forward whether or not you're watching every tick. And if I'm rebuilding a fortune, that's exactly what I want. Reliability without stagnation, growth without guessing, exposure without unnecessary risk. The total market ETF gives me the entire spectrum of American innovation, from legacy companies to startups becoming tomorrow's giants. It gives me diversification, resilience, and long-term compounding in one move. It's quiet, it's simple, it's mathematically hard to beat, and it frees up my time and attention for the next steps in my rebuilding strategy. Most investors are obsessed with finding the needle. They want that one stock, that one company, that one perfect pick that turns a small investment into a fortune. They chase stories, they follow gurus, they look for shortcuts that promise magic. But here's the irony that almost no one wants to accept. The people who actually build wealth on a large scale don't waste their time searching for needles. They buy the entire haystack and let the needles reveal themselves over time. And if I'm rebuilding my fortune in 2026 with zero room for error, that's exactly the approach I'd take. I don't want to gamble on individual companies. I don't want to pretend I can outguess the market. I want the entire ecosystem working for me instead of against me. Think about how much humility the market forces on you. You can study a company for months, analyze every metric, watch every interview, read every report, and still be completely wrong. Because one unexpected event, one lawsuit, one supply chain issue, one CEO mistake, one disruptive competitor can flip everything upside down. Meanwhile, the person who simply bought the broad market didn't even blink. Their portfolio absorbed the blow without collapsing, because they weren't relying on any single company to make or break them. That's the beauty of owning the haystack. You let the winners naturally rise to the top, and you let the losers silently fade away without taking your wealth down with them. Most people misunderstand what indexes do. They think it's just a basket of stocks, but it's not just a basket, it's a dynamic machine. It constantly adjusts, constantly evolves, constantly upgrades itself. When a company becomes irrelevant, it gets dropped. When a new leader emerges, it gets added. Over time, the index becomes a curated collection of the strongest players in the market. And you didn't have to lift a finger. You didn't need to know which company would dominate AI. You didn't need to guess which new startup would revolutionize energy or medicine. You didn't need to predict which industries would explode next. You just own the place where innovation naturally rises. This is the part that most investors fail to appreciate. Picking individual stocks is like gambling on which ship will survive a storm. Buying the entire market is like owning the ocean. And the ocean doesn't care which ships sink, because new ones are always being built. If I'm rebuilding from zero, I don't want to tie my future to the fate of a single ship. I want the whole ocean working in my favor. There's also something deeply psychological about this approach that people underestimate. When you stop obsessing over individual picks, your stress drops dramatically. You stop feeling like every red day is a personal failure. You stop tying your emotions to the performance of a single company. Instead, you start focusing on the long arc of growth, the slow, steady curve that bends upward over decades. That shift in mindset is one of the greatest advantages an investor can ever gain, because emotion is the biggest destroyer of wealth. People don't go broke because the market is unkind. They go broke because their emotions hijack their decisions. When you own the whole haystack, your emotions finally sit quietly in the back seat. Buying the entire market is also an admission of something powerful, that the future is unpredictable. No one knows which company will dominate 20 years from now. The giants of today may crumble, and tiny startups may become the next global titans. But when you own the whole system, you don't need to know the future. You simply need to exist in it. As new winners rise, your portfolio naturally leans toward them. As losers fade, your portfolio quietly forgets them. It's evolution disguised as investing. If I'm rebuilding in 2026, I don't want to be the hero who guesses right. I want to be the strategist who builds right. I want to harness the natural growth of the economy instead of fighting against it. Buying the haystack is the ultimate act of rationality. It's the difference between gambling and building. And when you truly understand how wealth is formed, you realize you never needed to find the needle. The needle finds you when you own everything it can grow inside. When people hear the word innovation, they immediately think of futuristic gadgets, flying cars, or robots walking down the street. But real innovation doesn't look like science fiction. It looks like slow, invisible breakthroughs that suddenly explode into the world and reshape everything overnight. And if I'm rebuilding my fortune in 2026 with a clean slate, I don't want to stand on the sidelines watching that happen. I want to be positioned right in the center of it. That's why the second ETF I'd buy wouldn't be some random tech fund. It would be one that captures global innovation at scale. Not hype, not speculation, but measurable technological progress that compounds over time. Innovation isn't a trend. It's the engine that drives the world forward, whether we notice it or not. Think about how quickly everything has changed in the last decade. Artificial intelligence went from a lab experiment to something running in your phone, your apps, your business, even your household. Biotech learned how to rewrite DNA. Quantum computing moved from theory to early-stage demonstration. Robots stopped being factory arms and started becoming autonomous workers. Energy storage leapt forward, as if someone hit a fast-forward button. None of these transformations asked for permission. They simply happened, and while most people sat around waiting for proof, innovation quietly created fortune. For anyone who had the patience to be early without trying to be perfect, the beautiful thing about an innovation-focused ETF is that it gives you exposure to these breakthroughs without requiring you to predict which company will unlock which miracle first. That's the trap individual stock pickers fall into. They try to guess the next Nvidia, the next Tesla, the next Moderna, the next Amazon. But innovation doesn't reward guessers, it rewards participants. You don't need to know who invents the next generation of AI chips. You just need to be invested in the ecosystem where those chips will emerge. And the right innovation ETF gives you that exposure effortlessly. Most people drastically underestimate exponential progress because our brains are wired for linear thinking. We expect slow growth, small steps, predictable progress. But innovation doesn't work in straight lines, it jumps. It compacts years of development into months. It creates tipping points where an entire industry transforms seemingly out of nowhere. And if you're not positioned before the jump, you miss the entire wave. That's why investors who wait for absolute certainty always arrive late. By the time the story is obvious, the returns have already gone to the early participants. If I'm rebuilding my fortune, I want the upside that only innovation can create. Not gambling level upside, but sustainable upside born from real breakthroughs. If AI accelerates even half as fast as experts predict, it will reshape every industry from finance to medicine to education to manufacturing. If quantum computing hits its stride, encryption, cybersecurity, drug discovery, and materials science will flip overnight. If biotech continues advancing, diseases once considered incurable may become manageable or even reversible. If clean energy tech keeps improving, trillion-dollar industries will shift. You want to be in the path of that transformation, not chasing it from behind. And the beauty of using an ETF for that exposure is that it lowers your emotional burden. You don't need to panic if one company's product fails. You don't need to hyper-analyze earnings reports. You don't need to guess which innovator gets disrupted next. Innovation ETFs are built with the understanding that these sectors are volatile. Companies rise and fall, but the long-term trend of progress continues upward. You're investing in the evolution of technology, not the survival of any single name. There's also something energizing about being invested in innovation. It makes you think bigger. It makes you view the world not as it is, but as it could be. When you own parts of companies pushing the boundaries of the future, you start paying attention differently. You see opportunities others miss. You understand that the world is about to accelerate, not slow down. You realize that wealth grows fastest where the world changes fastest. So if I'm rebuilding from scratch, yes, I want the broad market, but I also want the engine of global innovation powering my long-term upside. Not because I'm chasing hype, but because I understand how exponential progress behaves. It rewards patience. It rewards consistency. It rewards those who position themselves early and let breakthroughs compound quietly in the be patience is a strange thing in the investing world. Everyone talks about it, but almost no one truly practices it. People say they're long-term investors right up until the moment the market dips for 2 days in a row. They claim they believe in innovation until a headline spooks them. They say they're committed to their strategy until a friend brags about making quick money somewhere else. In reality, patience is the rarest skill in the market, and yet it's the one force that consistently turns small investments into fortunes. If I'm rebuilding from scratch in 2026 and my second ETF is focused on innovation, then the real question is, why does innovation reward patience more than anything else? The answer is simple. Because innovation doesn't move slowly, it moves quietly, and then suddenly, imagine standing at the base of a mountain, and at the start it looks like nothing is changing. A few new technologies pop up, a few companies experiment with new ideas, progress feels slow and unimpressive. Most people lose interest. They get bored, they sell too soon, they jump to something more exciting. What they don't realize is that innovation compounds in the shadows long before the world sees the results. AI didn't appear out of thin air in 2023. Robotics didn't appear overnight. Breakthroughs in biotech didn't suddenly materialize. These things were building layer by layer for years. And then one day the world wakes up and says, where did all this come from? That moment, the sudden dramatic realization of progress is when patient investors get paid. When you invest in innovation, you're investing in an engine that often looks slow from the outside. But inside that engine, the pistons are firing faster and faster. The people who quit early do it because they mistake quiet progress for no progress. The people who stay, they get rewarded when the exponential curve finally reveals itself. And believe me, that curve is always invisible until it's not. Human psychology just isn't built to naturally understand how exponential growth behaves. We expect small steps to stay small, but in innovation, small steps stack on top of each other until suddenly they become leaps that redefine entire industries. That's why being early matters, but being patient matters even more. Anyone can hop into an innovation ETF when the world is buzzing about AI or biotech or robotics. That's the easy part. The hard part is holding through the quiet stretches, the corrections, the confusing moments, the setbacks that are absolutely guaranteed to happen. Innovation is messy. Progress is unpredictable. Companies stumble, experiments fail, technologies hit walls before breaking through. If you panic the moment your position dips, you miss the moment the breakthrough finally hits the mainstream. You know what separates investors who benefit from innovation from the ones who don't? Staying power. It's not intelligence. It's not perfect timing. It's not insider knowledge. It's simply the ability to hold your position even when nothing dramatic seems to be happening. That's the irony most people never grasp. The biggest returns come during periods when it feels like nothing is happening at all. And then suddenly, everything happens at once. Look back at the early days of smartphones, cloud computing, electric vehicles, gene editing technology, machine learning. The biggest gains didn't come during the excitement phase. They came after years of quiet building, quiet refining, quiet iteration. Innovation rewards the people who had the patience to sit through those silent years. If I'm rebuilding my fortune in 2026, I don't just want exposure to innovation. I want the commitment to hold that exposure through the inevitable noise, because the biggest danger isn't picking the wrong innovation ETF. The biggest danger is not giving innovation enough time to work. Markets will shake, headlines will scare you, price charts will test your confidence. But the underlying progress, the advancements in technology, science, global development keeps marching forward regardless of your emotions. Patience turns volatility into opportunity. Patience turns uncertainty into growth. Patience turns an innovation ETF from a collection of companies into a long-term wealth engine. And the truth is, staying patient isn't just an investing strategy, it's a mindset. A decision to trust the long arc of progress instead of the short-term fluctuations of the market. When you embrace that, innovation becomes not just an investment, but a path that quietly compounds. Until one day, almost without warning, you're holding something extraordinary around. And that's a path to wealth most people never take simply because they're too busy trying to predict the future instead of aligning with the forces that create it. When it comes to rebuilding wealth in 2026, diversification isn't just a financial principle, it's a shield, a stabilizer, a psychological anchor. And when I say diversification, I don't mean owning 10 versions of the same thing or scattering money across random assets hoping something will work. I'm talking about intentional diversification, the kind that builds resilience into your portfolio. So your future doesn't depend on a single idea, a single industry, or a single market trend. Because the truth is, even the smartest investors in the world don't know exactly which sector will dominate the next decade. They don't know which breakthrough will win, which technology will fade, or which geopolitical event will shake the markets next. What they do know is that across enough innovation, enough global growth, enough sectors, and enough time, progress is inevitable. Diversification is simply a way to make sure the inevitable works in your favor instead of against you. One of the biggest mistakes people make, even experienced investors, is putting too much belief into one narrative. They fall in love with tech stocks, or energy stocks, or real estate, or crypto, or AI, or whatever is capturing attention at the moment. They convince themselves they've found the thing, the unstoppable trend, the guaranteed winner. But markets don't reward certainty, they reward flexibility. The world shifts, cycles rotate. Leaders of one decade become laggards in the next. Diversification builds a buffer between you and the unpredictable nature of global markets. It gives you the freedom to stay calm when one part of your portfolio is under pressure, because you know another part is quietly compounding. When building back from scratch, I'd want a portfolio structured like a team, each player with a role. Some assets provide stability, smoothing out volatility when markets get jumpy. Others provide growth, capturing the upside of long-term innovation. Some offer global exposure, tapping into countries and industries that moon independently of U.S. markets. Others hedge against inflation, currency shifts, and economic uncertainty. The power of diversification is that no single event can wipe you out. No headline, no crisis, no temporary downturn holds the power to derail your long-term plan. But here's the part most people never understand. Diversification isn't just protection. It's a performance enhancer. It keeps you invested when fear might otherwise push you to sell. It gives you staying power. It allows your portfolio to weather storms without you getting emotionally derailed. And emotional stability is one of the most underrated drivers of financial growth. If you panic every time a sector drops, you never stay invested long enough to enjoy the recovery. A diversified portfolio gives you the confidence to stay in the game, and staying in the game is what compounds your outcome. Another advantage of diversification is that it automatically exposes you to trends you might not see coming. Maybe AI slows down and healthcare takes off. Maybe robotics accelerates while fintech stalls. Maybe emerging markets enter a multi-year boom while developed markets tread water. A well-built, diversified strategy doesn't require you to predict any of this. It simply positions you to benefit from whatever the world decides to reward next. That's the beauty of it. You're not guessing, you're prepared. And when you're rebuilding wealth, the last thing you want to do is rely on perfect timing or perfect foresight. Diversification removes the ego from investing. You don't have to be a genius. You don't have to win every trade. You don't have to catch every uptrend. You just need a disciplined structure that captures global progress across different domains. Over time, the winners outweigh the losers. The growth outpaces the stagnation. The innovations surpass the failures. That's the silent power of a diversified foundation. In 2026, if the goal is to build a portfolio that's strong, balanced, global, and future-focused, then diversification is non-negotiable. It's the cornerstone that holds everything together when markets fluctuate. It's the mechanism that keeps your strategy intact. It's the reason your long-term vision isn't shattered by short-term noise. And perhaps most importantly, diversification is the mindset shift that turns investing from a gamble into a system. One where you give yourself permission to grow steadily, securely, and intelligently across whatever future unfolds. When people think about rebuilding wealth, they often imagine some genius level strategy, a secret code, a hidden formula known only to the elite. But the truth is far less dramatic and far more empowering. Real wealth isn't rebuilt through brilliance. It's rebuilt through systems, discipline, and the refusal to fall for shortcuts. When you strip away the noise, the hype, the daily chatter of markets rising and falling, what's left are habits, patterns, repeatable processes. The things that compound quietly in the background while everyone else is chasing the next big thing. And that's the part people struggle to accept. The boring stuff is what makes you rich. If I were rebuilding from zero, I wouldn't rely on clever strategies or flashy predictions. I wouldn't be trying to outsmart the market every morning. I'd focus on what has always worked not once, not occasionally, but consistently across decades and cycles. Systems remove emotion. They remove panic. They remove the temptation to react to fear or greed. When you build a system, you're not waking up every day wondering what the market will do. You're not guessing whether to buy or sell. You're simply executing a plan. And that's the difference between people who create lasting wealth and people who keep starting over. The reason most investors fail isn't lack of intelligence, it's lack of structure. They buy emotionally, they sell emotionally, they get excited at the wrong time and scared at the wrong time. They chase peaks and panic at lows. They think they're making decisions, but really they're reacting. And when you're reacting, the market controls you instead of the other way around. A system flips that dynamic. It lets you decide in advance how you'll act, no matter what happens. It locks in discipline long before volatility arrives. And when you lose that emotional tug-of-war, you gain consistency. Another important part of rebuilding wealth is ignoring the seductive illusion of shortcuts. Every few years, a new trend promises quick riches. Crypto booms, meme stocks, AI spikes, real estate frenzies, whatever catches the world's attention. People convince themselves this time is different. This time, the easy money is real. And every time the majority get burned. Not because the assets are bad, but because they approach them with a lottery ticket mindset instead of a strategic one. Wealth doesn't grow from jumping between shortcuts. It grows from the slow, steady application of a process that compounds. Shortcuts are loud. Systems are quiet. Most people chase the noise. The wealthy stick to the quiet. Discipline isn't glamorous, but it's transformative. Discipline means buying even when you're unsure, holding even when the news is negative, staying consistent even when results aren't visible yet. Discipline means trusting the math of compounding more than the thrill of guessing. And that's the part many people overlook. Compounding isn't just a financial concept, it's a behavioral one. It rewards patience. It rewards consistency. It punishes impulsiveness. Every decision you make becomes a small deposit into either long-term growth or long-term regret. And rebuilding from zero requires a different mindset altogether. When you have something, fear creeps in. Fear of losing it. Fear of making the wrong move. But when you're starting from scratch, you have a chance to build with purity, to create a foundation free from old mistakes, free from emotional baggage, free from the pressure of maintaining a lifestyle. It's a clean slate, And that clean slate is powerful if you use it to adopt discipline from day one, because once you set your habits, your system, your pace, everything else becomes easier. The growth feels slower at first, but then the curve steepens, and eventually it feels inevitable. What matters most in rebuilding wealth isn't brilliance. Brilliance fades when the market surprises you. Systems don't. Discipline doesn't. Consistency doesn't. The investors who win aren't the ones who know the most. They're the ones who fall for the least. They avoid noise. They avoid emotional swings. They avoid shortcuts disguised as opportunities. They build quietly, patiently, and intentionally, trusting the process more than the illusion of perfect timing. And that's why real fortunes come from repeated, reliable actions executed over and over again, not from genius, but from the kind of disciplined consistency that anyone can adopt if they're willing to commit to it fully. If there's one thing people misunderstand about building wealth, it's this. They think you need to be extraordinary. They think you need insider knowledge, special talent, or some brilliant ability to predict the future. But the people who actually end up wealthy, truly wealthy, know that the opposite is true. Wealth doesn't come from dramatic moves or once-in-a-lifetime opportunities. It comes from small, consistent decisions that compound so slowly, so quietly. You barely notice the progress until one day it's undeniable. And that's what most people miss. They're looking for fireworks when the real magic is happening in the background, silently multiplying day after day. If I had to start over in 2026, I wouldn't waste a single minute chasing the perfect stock, the hot trend, or the next big wave, because the moment you chase, you've already lost. You're reacting, not building. Real fortunes grow through repetition, not reaction. By choosing simple, time-tested investments like broad market ETFs, you're choosing to partner with the entire engine of global growth. You're choosing thousands of companies working every hour of every day to push the world forward. You're choosing stability over chaos, compounding over guessing, progress over panic. And that choice creates wealth far more reliably than any clever strategy ever could. People think investing needs to feel exciting. They think if it feels too easy, it must not be powerful. But the simplicity is the power. Owning a total market ETF, a global innovation ETF, and a defensive stabilizer ETF, those three positions alone, puts you in a better long-term spot than 95% of people trying to outsmart the system. They give you exposure to everything, the current leaders, the future disruptors, the safety nets that reduce volatility, and by holding them consistently month after month, you create a rhythm, a financial heartbeat. Every contribution becomes a brick in the foundation you're building for your future self. And the amazing thing about simple, consistent choices is that they don't just grow your account, they grow your emotional strength. The market will test you. It always does. There will be months of fear, headlines designed to shake your confidence, red candles that make you question everything. But when your strategy is simple, you don't have anything to panic about. You're not relying on a single stock or a single idea. You're not exposed to one company's failure or one sector's downfall. You own the entire economy. You own innovation across borders. You own progress itself, and progress always wins over time. Most people sabotage themselves through inconsistency. They start strong, then skip months. They buy when the market is euphoric and sell when everyone is scared. They chase high returns and abandon their plan the moment it gets uncomfortable. But the wealthiest investors don't flinch. They don't jump around. They don't get seduced by every shiny distraction. They stay steady. They keep adding. They trust the long-term arc of growth, even during short-term chaos. It's not because they're fearless. It's because they built a system designed to support them when emotions run high. And even more important, they understand that compounding is slow, painfully slow at first. You might invest for months or even a couple of years and see barely anything, but then, almost out of nowhere, the curve starts bending. The numbers begin growing faster than your contributions. The interest begins generating its own interest. The quiet work you've been doing in the background starts paying off in the foreground. That's the moment people call luck. But it's not luck, it's the delayed reward of consistency. The market always pays out to the patient. If you want real wealth, the kind that supports you, protects you, and frees you, then forget the myth that you need to be brilliant. Forget the belief that someone else has a secret advantage you don't. The real advantage is that you can choose to be consistent when others aren't. You can choose simple systems when others chase complexity. You can choose patience when others choose panic. And that choice, repeated steadily over years, becomes unstoppable. It becomes a fortune built not by genius, but by discipline. Not by prediction, but by participation. Not by leaps, but by steps. And those steps, taken over time, lead to a life that feels inevitable not because you were lucky, but because you showed up again and again for your future without ever needing to gamble everything on a single moment.